Back in May of 2026, this asset hit $1.82. Today, it's trading at a 70% discount from that peak. Usually, a crash that deep suggests a project is being abandoned, but the data shows the opposite. Daily trading volume is still holding in the tens of millions of dollars. While retail interest has cooled significantly following the price drop, the sheer scale of daily transactions suggests a different class of participant is still interacting with the protocol. This asset is Blockstreet, or BSB. It's important to note that this is a token existing on other networks, not a standalone coin with its own native blockchain. This level of volume confirms that even during a heavy sell-off, the protocol's liquidity engine is active, processing millions in daily transactions while the market struggles to find a stable price. To understand why volume matters, look at how markets are built. Traditional stocks and crypto liquidity live in separate worlds, completely isolated. Blockstreet bridges that gap. It's a multi-chain protocol running live on both the Ethereum and BNB chain networks. At its core, it functions as a DeFi liquidity protocol, specifically engineered to handle tokenized stocks and real-world assets. This architecture takes those fragmented, isolated markets and attempts to merge them into a single, shared liquidity layer. By doing this, Blockstreet provides the technical pipes needed to move large-scale traditional assets onto the blockchain. The technology is only half the story. Market cap sits at $118 million, but total supply is capped at 1 billion BSB. Currently only 22. Instead, the remaining 780 million tokens are scheduled to unlock gradually over time through a vesting process. As these unlocks occur, the total number of tokens on the market increases, which systematically dilutes the value of the tokens held by early investors. This constant influx of new supply creates a mathematical weight that pushes down on the token's price, regardless of how well the protocol performs. It's a liquidity paradox. The protocol might be highly useful, but the rapid expansion of supply makes it difficult for the token's price to maintain upward momentum. This dilution risk is reflected in the current price, which is hovering near 53 cents. This chart tracks the volatile path from the May high of $1.82 down to today's 53 cents, illustrating the struggle to price in future supply. If the sell-off continues, analysts are watching the 30-cent zone as the next major area of support. For now, the market is effectively in a waiting period, trying to determine if demand can eventually keep pace with the scheduled unlocks. The bullish thesis for Blockstreet centers on its specific niche, bridging traditional stocks with DeFi liquidity, a sector with high potential for long-term growth. But the bearish reality is the supply curve. Those heavy future unlocks make an immediate entry risky for anyone concerned about further dilution. Because the project is so new and its track record is limited, the most prudent approach is to watch how it handles its first major vesting periods. If you want to track the price action yourself, BSB is currently available on Bybit and BitGet, or through swaps on Uniswap. Blockstreet is an example of strong infrastructure meeting difficult tokenomics. It's a project that belongs on a watch list, but the math suggests caution before putting it in a portfolio. If this breakdown helped you navigate the BSB protocol, hit the like button and subscribe for more. Let us know in the comments, do you think the utility here outweighs the dilution? As always, do your own research.